In today's video, we are going to discuss how to prepare your lender file and what documents you need, the FHA 203K overview. I'm going to discuss closing costs and the underwriting process. Welcome back to the channel. This is Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. I need you to go to mgbookstore.com, pick up House Hackonomics, the Real Estate Investors Manifesto. We are talking FHA 203K loans. Now, in order for you to complete your House Hackonomics, especially in today's marketplace, where we're in a correcting marketplace, values have decreased, right? Although there's still been appreciation in 2022, we are correcting nevertheless. And the true way to build wealth in real estate is by forcing the appreciation. And FHA 203K loan, especially if you're a first-time home buyer, this is the perfect first loan. This is like my training wheels for investors, is what I like to call it, right? So this is a perfect loan for you to burr and force that appreciation and build wealth. So the goal of this video is to give you guys a baseline of what it takes to get approved in 2023 for FHA 203K loan, how to go through the underwriting process as smooth as possible, because these loans are not easy, y'all. This loan can be a headache, especially if you're dealing with a loan officer who really doesn't know what they're doing and doesn't have the experience. Then it can be a complete disaster. All right. So the whole purpose, again, is for you to know how to get approved, how to go through a seamless transaction, as seamless as it can be, and get to the closing table in a timely manner. All right. So let's talk about the documents needed to get pre-approved. Last 2 years W-2s. We need to see a 2-year work history. Right now, for you guys, this is a commonly asked question. Folks will always ask me, what if I change jobs? Will that hurt me? No, it will not hurt you as long as your income is the same or increasing and you go from a W-2 to a W-2 job. If you go from W-2 to self-employed, you just started your clock over. If you go from self-employed to W-2, you just started your clock over. So we need to have a 2-year work history. Now, even if you have gaps of employment, that is okay to have a gap of employment. Let's just say you left Target and you were job hunting and you found something in the post office and it took you 3 months and you have a 3-month gap of employment. That is okay. Underwriters will just ask you for a letter of explanation, but as long as you have a 2-year combined work history, right, we can still use the income. Again, when you go from W-2 to self-employed, that's when it hurts you in a negative way. So 2 years, W-2s, and if you have gaps of employment, please let your loan officer know up front. Last 2 years tax returns for self-employed borrowers only. So if you're self-employed, remember, when you're doing a full documentation loan, when you're doing an FHA, whether it's a regular FHA 203B or a 203K like this loan, this is full documentation. So for self-employed borrowers, we're going to qualify you off the net income, not the gross income. So for all my self-employed people, if you are making $1 million a year in your business gross, and you tell the IRS after all your expenses you only made $40,000, then that's the income a lender's going to use, and I'm just giving you guys general numbers here, okay? So you can have an understanding, but that's the income that the underwriter's going to use. So we're going to need to see 2 years tax returns on that. Last 30 days of pay stubs, self-explanatory. Last 2 months of bank statements, all pages. Now, let me break this down real quick for you guys. You know how in some bank statements, let's just say if it's 7 pages, but that 7th page is left blank intentionally by the bank who sent you the bank statement. You have to send that blank page to the lender as well, because underwriting will ask for that blank page. So always keep that in mind. All right. Now, with your bank statements, if you have a lot of cash deposits or deposits that you can't document where they came from, you need to clean up your bank statements. Do not, I repeat, do not give yourself more of a headache by providing bank statements that have so many different transactions with miscellaneous cash and funds moving in and out of your account that you can't document, it's just going to create a paper nightmare for you. So my advice is start a separate bank account, use that as your real estate fund, and don't do any transactions in that but deposits from either your direct deposit or somewhere where it's getting documented where the money is coming from, and just have it clean. So that way you can go through underwriting with no problem. That's a quick tip for y'all. We're going to need a copy of ID and completed loan application. Now, if you're getting a gift, the lender will want to see a gift letter, and they will want to see that money is coming from your donor into your account. But typically during the pre-approval stage, the lender won't ask for any of this information. They'll just tell you when you get into contract, they're going to need it. So I want to prepare you guys ahead of the time. If you are getting a gift, you're going to need that. If you're using your 401k, which is okay, lenders do allow it, we're going to need to see a copy of that 401k statement and then see how much money you can take out of there as well. All right. So these are the documents that you guys need to get pre-approved. Also, another tip I want to give you, document management and organization is very important. So make sure you're using Google Drive, Dropbox. You're using these type of resources to keep all your documents together and organized. So that way, when it's time for you to present them to your lender, you could just send them a link and they'll have everything in there with no issues. So organization and document management is very important. Now, these are the same documents that you're going to need if you're getting a regular traditional FHA 203B loan, which comes with no rehab. So it's the same documents. All right. Now, let's go to the next topic. Next topic is we're going to talk about the FHA 203K overview. So let's break down what this looks like for you guys. Now, some things depends on the lender. So I'm kind of going to break this down a little bit slower for you guys. Minimum credit score can vary depending on the lender. Now, some lenders with a 203K will go 600. You might hear some lenders say they may go 580. But from my experience, 600 to 640 is typically where the lenders are going to be. Now, every lender is different. They're going to have overlays on top of FHA guidelines. Technically, with an FHA loan, you can go down to a 500 credit score, but you'll have to put anything less than 580 credit score, you have to put down 10%, and anything above 580, you can do 3.5. But again, lenders have their own overlays on top of the guidelines that HUD provides lenders to protect themselves just in case, you're going to default or something. So make sure you check with your lender's guidelines and make sure the lender that you use doesn't have too many overlays. Now, minimum down payment, if you're in that 600 to 640 range, will be typically 3.5%. You are allowed to put down more money if you want to. The max seller's concession is 6% of the sales price. Now, for those of you who don't know what a sales concession is basically the seller agreeing to use whatever potential equity that they have in the home so that way you can finance your closing costs. Now, when you hear seller's concession, this is not a guaranteed thing. One, the seller has to agree to it. Two, the house has to appraise for that seller's concession. Now, when you're doing the 203K, you have to be very careful with seller's concession because not only does your house have to appraise for the seller's concession, but it also has to appraise for that repairs you're looking to get done as well. So you're going to put a lot of pressure on your ARV, your after renovated value, if you're asking for a lot in construction costs and also a seller's concession. So please be mindful of that. But a seller's concession is allowed. Now, 1 to 4 family, FHA approved condos, and mixed use properties are allowed with FHA 203Ks. Now, mixed use properties, for those of you who don't know, is a commercial property. Typically in New York, a mixed use property looks like a bodega, which is a corner store, and apartments on top of it. Now, as long as that commercial unit and the residential unit doesn't is not greater than 4 total units, and the residential square footage is larger, at least 51% of the livable square footage of the building, then you can get that commercial property approved for a FHA loan. So yes, for those of you who didn't know, you can buy commercial property with an FHA loan. Now, another great tool about FHA is if you're buying a multifamily 2 to 4 units, you can use 75% of the rental income to help you qualify. Now, here on the channel, we already did a video breaking down using rental income to help qualify you. So I'm not going to get into too much detail about that. It's going to be a little card up here somewhere. Tukes or Will going to put it somewhere here. All right. And you'll be able to go watch that video, and we break down the 75% of rental income and the calculations of it. Now, 3 to 4 units, you must pass the FHA self-sufficiency test. This is an extremely important test, especially if you're looking to house hack, that you need to know about. Again, we have a whole video about FHA self-sufficiency. We're going to put that in the card right now too. All right, so that way you guys can go watch that and learn in detail of the self-sufficiency. I'm not going to leave this for this video because this is really more about 203Ks. So I'm just giving you guys an overview. But as you can see, this channel is very resourceful. So make sure you guys are checking playlists, because we got a lot of information on here to help you with your house hacking journey. Now, 3 to 4 units need 3 months of reserves. Reserves is typically your mortgage payment and 3 months of it. So if your payment is $1,000, then the lender will require you to have $3,000 post-closing that's in your checking, your savings, or in your brokerage account. So that way, if anything comes up, tenants don't pay you, you have money to pay your mortgage. Grants, gifts, 401ks can be used. Cosigners can be used for FHA loans, and the cosigner does not have to be an owner-occupant. They could be a non-owner-occupied cosigner. Max loan amounts are based on FHA county loan limits. Now, the loan limits increased for 2023, which is great news for majority of the country. But again, every county is different on what loan amounts you can use for what property type. So Google is your best friend, ladies and gentlemen. Google FHA, the name of the county that you live in, 2023 loan limits, and it will come up for 1, 2, 3, 4 family properties, the maximum loan amount per FHA in your area. Mortgage insurance is required for the life of the loan. If you put down less than 10%, then the mortgage insurance, or the MIP, mortgage insurance premium, or AKA PMI, for those of you who don't know what the hell I'm talking about, right? This mortgage insurance is for the life of the loan. If you put down more than 10%, then the MIP goes away after year 11. Now, the only way to remove this PMI within this 10 years, or prior to this 10 years, if you do put down less than 10%, is you have to refinance out of the 203K loan and get into a different type of loan and try to remove your PMI. Now, I want to be very clear the next thing I'm about to say, because I know the internet will tell you different. But this is not the channel that's going to promote fraud, okay? FHA loans are only for your primary residence. Primary residence only, okay? No, you cannot buy it in the LLC and do an FHA loan. No, you can't buy it out of state and do an FHA loan. You have to live in the house for at least 1 year. Ladies and gentlemen, don't let the FHA police run up on you. There are compliance police out there. They do check. I'm not saying they check all the time, but they do check. People do get caught up. Don't get caught up. Don't be made an example of. Make a commitment for 1 year to live in the property, and then you're free to move out and house hack your life away. All right? But stay in the property for at least 12 months. All right, so now let's get into 203Ks. Now, ladies and gentlemen, there are 2 types of 203Ks. The first is the limited 203K. Now, the limited is going to give you limited funds available for you to do repairs. Now, with a limited, you can finance up to $35,000 in repairs and can finance up to $50,000 if the property is located in the opportunity zone. Minor repairs and non-structural items only, All work must be completed within 6 months, and no HUD consultant is required. Now, before we move to the full, I want to make something very clear. We'll talk about HUD consultant in a few minutes, but reserves. So although it's saying 35,000 and 50,000 up to repairs, you always got to remember with a 203K, some of that monies will have to be put as reserves. The lender will never let you max out repairs money and not have a contingency reserve in place. Typically, for a limited 203K, your reserves will probably be around $5,000, just depending on the scope of the work and what exactly you're doing. And if you're doing 50,000, it could be $500 to $7,500. It's kind of typically what we've seen in reserves. So it's always, so if it's, let's just say 35,000 in repairs is your max and you got 5,000 in reserves, then that only leaves you 30,000 for repairs. All right, 30,000 for repairs. I just want to point that out to you guys. Now, with the FHA 203K standard, this allows you to make substantial renovations. Conversions are allowed. Now, a conversion is basically when you're taking a 1-family and converting it into a 2-family or a 3-family or 4-family, or taking a 2-family, convert it to a 3 or to a 4, et cetera, right? This is very popular in New York. New York has a lot of multifamilies here. And what folks would do here in New York is they'll purchase the home and maybe refinance down the road, do a 203K to now build their multifamily, force their appreciation, and bring in more cash flow for the property. So you can also use, for all my homeowners out there, you can also use a 203K for a refinance. Now, conversions are huge. Now, if you're in an area that doesn't have a lot of multifamilies, because I get that all the time, not everywhere is like the tri-state area. So if you're in the area, let's just say like Houston, for example, Houston zoning rules are very relaxed. So I've been in Houston. I know developers out there. You can build townhomes on the same block as single families, and on the same block you'll see a 5-unit multifamily. Like, it's absolutely the wild, wild west, right? So when you're in these type of areas, make sure you guys are checking your zoning laws, because a lot of times you can take a 1-family, use a 203K, and make it into the duplex or the triplex that you've been looking for. But you just got to know your zoning laws. So there's a lot that goes into that. You know, you got to get permits, plans, inspections, which, again, all these soft costs can be financed into your 203K loan, but it's a lot more work. So make sure you have a good team with contractors, architects, if you're going to try to do conversions. All right. 6 months of mortgage payments can be financed if the home is unlivable during rehab. Very important. Now, when you're doing this 6 months of mortgage payments and this payment reserve, remember, this has to be included into your scope of work as well. So when the HUD consultant goes out, right? Matter of fact, I'm going to talk about the HUD consultant in a minute, and then I can kind of break all this down better, right? But the 6 months of payments has to be included into the scope, and it has to be in the HUD consultant's report. Now let's get to the HUD consultant, right? So I can kind of tie all of this in together, because some of you are probably like, who is a HUD consultant? What is a HUD consultant? What exactly they do? Now, a HUD consultant basically is the training wheels, especially for your newbies who want to do burrs, who want to do fix and flips in the future. You want to do rehabs. You know, this is giving you training wheels, and the HUD consultant kind of acts like that construction project manager. They're the person that is there to protect you and the bank from the contractor. Now, we've had many conversations on the channel about contractors. Guys know how to spell too, but this HUD consultant is the person that is that buffer, right? So if the contractor doesn't do what they need to do, they're not going to get paid. And the HUD consultant has to sign off on any of the work that they're looking to do. All right. So this is extremely important that your HUD consultant, when you choosing one, make sure they understand construction. Make sure they have a background in that, because if they do, then they'll be able to teach you during the process as well while they're holding your hand. So all the HUD consultants that I recommend all have a construction background. It makes life a lot easier because then from a scope of work perspective, they'll be able to tell you as well, like, hey, I think your contract is kind of beating you over your head with this pricing. You can probably get it a little bit cheaper. Now, my HUD consultants that I've used have saved some of my clients tens of thousands of dollars because they had this type of education. So picking the right HUD consultant is key. Now, how do you find a HUD consultant? You can go on HUD's website. You can just Google HUD consultants and the link will come right up, right? You can also ask your lender for a referral or your realtor. Now, the HUD consultant, the most important part of the HUD consultant is the most important thing that we need from the HUD consultant from a lender's perspective is their work write-up. It's called a feasibility inspection report. Now, on this feasibility inspection report, and this report can be 10 pages, 15 pages. It just depends on the scope of the work and the size of the job. But in this feasibility inspection report, it's going to tell the lender exactly what we're looking to do with the rehab funds that we're requesting. It breaks down everything: labor, cost, material. I mean, everything, right? Everything's broken down. And within this feasibility inspection report, remember I said you can have 6 months of payments finance into this loan. It has to mention that on the HUD consultant's feasibility inspection report. If it doesn't mention it, then we will never know as the lender. And I've had situations where it was discussed between borrower, contractor, consultant, realtor, but it never got back to us, the lender. And by the time we go to closing, that 6 months of payment is not included into the deal, and now it's nothing we can do because we at the closing table. And trust me, it's a big ass headache. I ain't gonna hold you up. But make sure that is on the work write-up if this is something that you want to do. Now, what I was saying to you guys earlier about this money, again, it's the same thing with the seller's concession. Remember, your house has to appraise for this extra money. So if you're buying a house, ladies and gentlemen, for $300,000 and you want to get $100,000 worth of work done, but you want $10,000 to pay your closing costs and you want to put another $10,000 for mortgage payments, that's $120,000. So now that house has to appraise for $420,000 in order for you to get everything. So that's why it's very important when you're doing a 203K, you're paying attention to the comps so that way you can determine the proper ARV for your work. Now, the HUD consultant fee is typically anywhere between $400 and $1,200, which most will require 50% paid up front and then other 50% at closing. And depending on the scope of the work will determine the fee, but it's all standard nationwide. HUD controls the fee, not the consultant. So you don't have to worry about, is one going to be cheaper than another? That's not what you're shopping for when you're shopping for a consultant. You're really shopping for their knowledge and see who's going to be best fit to help train you and coach you through this whole 203K process. All right. So that's kind of like, again, it's a lot more when it comes to consultants. But that's just a quick overview so that way you guys have a better understanding. Now let's talk about contractors. Contractors. We love contractors, right? Contractor has to be licensed for a minimum of 3 years. If the state doesn't require a license, then a minimum of 3 years experience and references are required. All right. Self-help arrangements are allowed if you can meet the above requirements. Now, a self-help arrangement is basically when you want to do the work yourself. Now, if you're not a licensed contractor with years of experience, you might as well forget about it. It's going to be hard as hell for your self-help arrangement to get approved by underwriting, right? So make sure you guys just hire yourself a general contractor, builder, but make sure you vet them, especially with these references. The references, lenders will call them. We have to call the references. So make sure you got good references. Now, the part of the thing, and this is what I like to tell all my clients who are doing a 203K, don't wait till you find a house to find a contractor. First of all, you need to find a contractor who has experience with 203Ks. They need to understand how they get paid. They need to have worked with 203Ks. There's a lot that goes into this process, right? They need to understand the paperwork, because a lot of contractors are not organized. So just for them to find their license and their insurance and things like that, that could take them days or weeks because they're also busy at the same time. So you have to make sure that your contractor is on point, and you don't want to wait until the 99th hour to go look for this contractor, because now you're only delaying yourself when you sign that contract. So my advice to you guys is, when you find the house you love, hopefully you would already interview your contractors and your HUD consultants. And when you have that house you love and it's time for you to do your inspection, make sure your consultant and your contractor are there at the same time. So that way everyone is on the same page from the very beginning of this process, of the scope of work that's going to be done, the time frames, how many drawers are needed, etc., etc. So make sure that everyone is linked up, because this is a team effort. In order for you to go through the underwriting as smooth as possible, your contractor and your HUD consultant need to be like this, right? If they're not like this, to the best of your ability to try to manage that, this is going to be a freaking nightmare. And make sure your contractor and your consultant communicates well, because sometimes these folks will drag their feet, and it could take them days or weeks for you to get any type of information from them. And now remember, the lender can't do anything on your file until we have what we need from the contractor and the HUD consultant. So I'm stressing this a lot in this video, because I want you guys to understand this process is not easy, and it's only because we have so many moving parts with contractors, consultants, you know what I'm saying? So make sure everybody's on the same page. And remember, you as the CEO of your business, you need to make sure your team is at full attention and they understand your goals and the urgency of them. All right? So that's what the documents are needed for the contractors. Now, how contractors get paid. With a full 203K or the standard 203K, there's no upfront payment. There's typically, after closing, you'll get 10% of the job. So if it's a 100K job, you'll get $10,000 for material to get started. So that's why it's very important, again, that your contractor understands how to get paid, because some contractors want to come in and say, give me 50%, give me 40%, give me 30% of the job to get started. With this, no. You're not going to get that. So the contractor will have to be able to float the job until a draw is requested. A draw is basically the lender dispersing the funds. All right. So let me give you guys an example. Let's just say you're doing 100K worth of work, and you got 4 draws. So you got 4 checkpoints, right? Let's say first phase is your new kitchen. It's going to cost you $25,000, but they only gave you 10. So now that contractor has to be able to float that 15K, do the kitchen. The consultant will come after the kitchen is done, cross the T's, dot the I's, make sure everything is where it needs to be, and then the consultant will request a draw from the lender, and then that money will get paid to the contractor. And it goes on like that until the project is completed. So you see the importance of the contractor knowing how they get paid. Because if they don't know how to get paid, and I'm telling you this just from experience, these people will tell you, yes. You go to closing, you're ready to start. They say they want this amount. You say you can only get this, and then they quit. They don't want the job no more. And then now you have to go find a new contractor and redo paperwork, et cetera, et cetera. It's a pain in the butt, ladies and gentlemen, and you don't want this headache. Trust me, I'm telling you, because I'm telling you this because I don't want the headache. And no loan officer in America who deals with 203Ks want that type of smoke. Trust me on that. All right? So that's how they get paid on the 203K standard. Now, on a 203K Streamline, and this is why a lot of contractors who do 203Ks, they rather stick with the Streamline, because they'll get 50% of the material / labor costs, within 10 days after closing, and the remaining funds are released once all the work is completed. There's no more than 2 draw payments allowed, and 1 final inspection is needed once all the work is completed. So this is the 203K Streamline contractor payment. It's a little bit more streamlined, and this is why the contractors love to do this one. So this is how they get paid. I hope you guys understand that. Throw some gems in the comment if you do. Now, let's go to the underwriting process. You see I had to pause, right? Because this is where things can get tricky. Now, first things first, you have all your paperwork. We discussed that early in the file. You give it to your loan officer. You got an accepted offer on your house. Now, you're ready to move forward. Rule number 1, I'm going to tell you, do not, with a 203K, please do not have under 30 days closing. I would highly recommend you do 45 to 60 days on your closing date with a 203K, because there's a lot of moving parts, especially if you're doing a full or a standard 203K where it's a big job. Now, this is why I'm stressing to you guys in the beginning is to have your contractor and your consultant on the same page from the very beginning, because now you have your contract signed, executed, your clock is ticking. Your loan officer can't do anything without that feasibility inspection report from your HUD consultant. Once the loan officer gets that document, then they can complete what's called a FHA 203K worksheet. And when they do the FHA 203K worksheet, then they're able to do their loan disclosures, get the disclosures out to you, and then they're also able to order the appraisal. The appraiser cannot move forward with the appraisal without the feasibility inspection report either. So you see how important the consultant role is right now. If they take 2 weeks, 3 weeks to write up this report, your loan has been sitting for 3 weeks. Your clock has been sitting for 3 weeks. You can't even get an appraisal, right? A lot of time can be wasted. So this is why I'm stressing you need to make sure your consultant can get you this within a few days or 5 days tops, right? Because now once we get it, we can do what we had to do, order the appraisal, submit the loan to underwriting. You sign your disclosures, we submit everything to underwriting. The underwriter is going to review it. Most underwriters will wait until that appraisal comes before they make an underwriting decision. Some underwriters won't. But for the majority of my experience, the underwriters will wait until they get that appraisal to make an underwriting decision. Now, when you get that appraisal back, this is the most important document of this entire process, because this is going to tell you, did I just waste my freaking time paying for all these inspections and appraisal reports if the house didn't appraise, right? Let's hope that the house appraises for everything that you guys are asking for, whether it's sales concessions, payment reserves, $100,000 in rehab, whatever it is. Let's hope the house can support this. Now, let's just say if the house cannot support the value, again, we buying it for $300,000. You're going to need about $150,000 with rehab, seller's concession, and the payment reserve. So you need $450,000 value. Let's just say it came in for $400,000. What happens is this, and this is where things get sticky too. Now, the appraiser gave the value based off of that $100K in work. Is the house is worth $450,000. So now your payment reserve and your sales concession might have to be deducted, so that way you can get to that $400,000 and get the deal going, right? So you see how that works there. If the house doesn't appraise, then you have to cut back. Let's just say, for example, you wasn't getting a sales concession or you wasn't doing the payment reserves, but the house still appraised for less money. If you decided to change the scope of work to take less rehab, Now, the appraiser has to get an updated feasibility inspection report, which means the HUD consultant has to do more work. And now the appraiser basically has to do a new value based off that new scope. So there's a possibility with even you taking out a couple repairs here, a couple repairs there, that the house still won't be worth whatever it is. And I'm explaining this to you guys because I've seen it happen several times. And it's very difficult sometimes to come up with a happy medium in these cases. And if the borrower really just wants those repairs, let's say it's going to cost them $10,000 or $15,000 out of pocket, then they'll just pay the extra and the difference out of pocket, right? But if you don't have that type of funds, then this can turn into a dead deal, right? Now, every situation is different. We've been able to finagle and maneuver and make things happen to where, everybody was still happy. But I'm giving you the game on this so that way you are fully aware of the things that could happen during that appraisal process. All right? That's why it's important. Your comps in the beginning of this whole thing is the most important thing. All right. Now, that's the appraisal. So let's just say the moon, stars, sun, everything aligns, and now the house comes back at value. You're able to get everything that you need and you want and you desire. Underwriter approves your loan with conditions. You meet those conditions. You submit it back into underwriting. Congratulations. You are now cleared to close, right? That's what we really want. But sometimes it doesn't happen that way. And the more due diligence you do up front will save you a lot of headaches in the back end, of the loan process. So, again, make sure your realtors understand 203Ks. Make sure your loan officer that you're working with understands 203Ks. Make sure your consultant knows construction, right? Make sure you're getting great comps from the very beginning. Make sure not just comps for value, but comps if you're doing a 3 or 4 family for self-sufficiency. Make sure you're getting good rental comps too, so that way you're doing your numbers accurately. So there's a lot of things that can go wrong with a 203K, but if done properly, this to me is the loan that you guys should be using, especially if you're looking to continue to invest and to do fix and flips and to do more burst strategies in the future. This is the perfect loan. 3.5% down, low credit scores, 100% of rehab money, plus you can get payment reserves and seller's concession, and you can buy a commercial building with an FHA 203K loan. This is an absolute no-brainer. In the correcting market of 2023, this is the loan that you guys need to be using to build wealth with real estate. I don't care if you're a first-time home buyer, there's going to be a new dream house, primary residence. Forcing appreciation is the way. Buying right is the way. And this is when you guys who are going to do this loan, you have to now transition your mindset to start thinking like an investor as well. You can't be buying houses at these retail prices or above asking prices. You got to learn how to negotiate. You got to look for homes that are in terrible condition. You can use 203Ks on foreclosures, short sales, bandos, right? The house can be falling apart. You can use a 203K loan. So you have to be looking for the same type of deals that an investor would look at. So that way you guys can build your wealth, right? And this loan is here for you to do this. All right. So this was an overview of the 203K loan and the process and how to make this as streamlined as possible. This is a little bit longer than the videos we've been doing on the channel lately, but I couldn't do this in 10 minutes. You know what I'm saying? Like, I wanted to give you guys as much information as possible so that way you don't go into 2023 and you don't go into this situation blind. You don't go into this situation not knowing certain things. All right. So if you got value from this video, leave a comment, throw a gem in there. And if you plan on using a 203K this year, me and my team would love to help you. We're licensed in 21 states. We are experts with 203Ks. We would love to help you guys. Go to applywithmg.com. Links will be in the description as well. And thank you for your time today. Matt Garland here, NMLS number 58700. but better known as MG the Mortgage Guy. Peace.